For the beginner who first gazes upon the vast and intimidating landscape of the stock market, the feeling is one of profound confusion. He is confronted with 1,000 different stocks, 100 conflicting theories, and a constant deafening roar of news, tips, and opinions. Where does one even begin? How can a novice hope to navigate this treacherous terrain without being swiftly and mercilessly consumed? The answer, according to the master speculator Jesse Livermore, is not to attempt to master the entire market at once, but to adopt a single, sound, and proven strategy, a foundational plan designed to align the trader with the market's most powerful and forgiving force, the great primary bull market. This is that plan. It is a simple, sequential, and logical 5-step guide, a distillation of Livermore's own hard-won wisdom, specifically tailored for the speculator who is just beginning his journey. This is not a get-rich-quick scheme, for he knew such things were a myth. It is a get-smart-and-survive plan, a methodology for building capital and confidence by operating only when the great probabilities are overwhelmingly in your favor. To follow this plan is to abandon the reckless, impulsive habits of the amateur and to take the first critical steps onto the path of the professional. He understood that the great tragedy of the novice is that he tries to do too much, too soon. He attempts to trade every fluctuation, to have an opinion on every stock, to be a bear one day and a bull the next. He is a man fighting a multi-front war with no training and no strategy. The result is inevitable defeat. This 5-step plan is the antidote. It is a framework for radical simplification, for focusing one's capital and one's mind on the highest probability setups in the most favorable of all market conditions. The journey of a speculator is often a solitary one, marked by the intense pressure of making high-stakes decisions alone. It is easy to lose perspective, to be swayed by the noise of the crowd, or to falter in your discipline after a series of setbacks. This is why we created this channel, to serve as a constant source of these timeless principles, a place you can return to, not just to learn, but to recalibrate your mindset. If you are committed to the path of a professional speculator, subscribe to our channel and return to these lessons. They are here to provide not just knowledge, but reinforcement and perspective when you need it most. The plan begins not with a stock, but with a condition. Step 1. Confirm the bull market. This is the first and most important commandment for any beginner. The novice speculator has no business attempting to sell short or to trade in a choppy, sideways market. These are the games of seasoned, experienced professionals. The beginner's only game, the only arena where the odds are tilted significantly in his favor, is the long side of a great confirmed primary bull market. If this condition is not present, the plan does not begin. The first step, and often the most profitable, is to do nothing at all. What is a bull market? It is not a matter of opinion or of reading bullish headlines in the newspaper. It is a fact demonstrated by the market's own behavior. It is a condition where the great underlying line of least resistance is unmistakably upward. It is a time when the general list of stocks is making a series of higher highs and higher lows. It is a time when the leading industry groups are emerging with force, their component stocks pushing into new high ground with ease and conviction. It is a time when the market readily absorbs profit-taking and treats bearish news with contempt. The beginner's first task is to learn to recognize this condition, to become a student of the market's overall character. He must learn to distinguish the powerful, sustained advance of a primary trend from the deceptive, short-lived rally of a bear market. He must have the supreme patience to sit in cash, to wait for weeks or even months if necessary until this great favorable tide is undeniably rolling in. To trade without this tide at your back is to row a small boat against a hurricane. With the great primary trend confirmed, the checklist moves to the next critical step of filtration. Step 2. Identify and follow the leaders. Even in the strongest bull market, not all stocks are created equal. The great upward force of the trend is never distributed evenly. It is always concentrated in a select few industry groups, and within those groups, in a handful of undisputed leading stocks. These are the generals of the market army, the stocks that move first, fastest, and furthest. The beginner's entire focus must be on identifying and trading these leaders. Livermore was absolute on this point. He stated with the force of a man who had proven it 1,000 times. If you cannot make money out of the leading active issues, you are not going to make money out of the stock market as a whole. The amateur, in his quest for a bargain, almost always makes the fatal mistake of buying the laggards. He sees a stock in a strong group that has not yet moved, and he believes it is cheap and due to catch up. This, Livermore knew, was a profound and fundamental error. A stock that is lagging in a great bull market is not a bargain. It is a weakling. It is a company with some unseen internal flaw. Its failure to participate in the general advance is the market's own clear, unambiguous warning signal. The professional heeds this warning. He is not a bargain hunter, he is a strength seeker. He knows that the greatest profits are always found in the stocks that are already showing the greatest strength. He's not afraid to buy a stock that looks too high to the amateur, for he understands that a new high is a sign of power, not of risk. Now, Livermore was a master at observing that a bull market was in force, that certain stocks were acting as leaders. But why does this happen? What are the unseen forces that create these great trends? For that, we turn to one of his great contemporaries, a man who didn't just practice the art of speculation, but who codified its science, Richard Wyckoff. While Livermore was the supreme speculator, acting on the tape's immediate message, Wyckoff was the supreme analyst, mapping the great campaigns of accumulation by smart money that are the true cause of a bull market. Wyckoff shows you the engine room. Livermore shows you how to pilot the ship. To truly understand the internal mechanics of the market, the logic of supply and demand that Livermore himself mastered intuitively, we invite you to subscribe to our new channel, Richard Wyckoff Trading Methods. The link is in the description below. The beginner then must learn to identify these leaders. He must watch for the stocks in the leading groups that are the first to make new highs. He must look for the stocks that are advancing on a surge of volume, a sign of broad and aggressive buying. He must observe which stocks are the most resilient during the market's normal, healthy reactions, giving up the least ground and being the first to rebound with vigor. He must, in short, learn to distinguish the generals from the common soldiers. The story of Chester Motors is the ultimate cautionary tale. While the entire automobile group was soaring in a great bull market, Chester stubbornly refused to advance. The public, seeing it as cheap, began to buy. Livermore, reading the tape, saw its weakness as a definitive sign of disguised inside selling. He sold the stock short and profited handsomely when its internal problems were finally revealed to all. He had obeyed the second great step of the plan. He had shunned the laggard. By completing these first two steps, the beginner has dramatically and profoundly tilted the odds in his favor. He has ensured that he is trading only in the most favorable of all market conditions, and that he is focusing his capital only on the highest probability, most powerful of all stocks. He has eliminated the two greatest sources of amateur failure, fighting the primary trend and betting on weak, underperforming stocks. He has now completed the strategic portion of his campaign. He is now ready to move to the tactical execution, the final three steps that govern the trade itself. Having completed the first two strategic steps of the plan, the beginner now stands in a position of immense analytical advantage. He has confirmed that the great primary tide of the market is at his back, and he has identified the single strongest ship, the leading stock upon which to make his voyage. He has already eliminated the two greatest sources of amateur failure. But a brilliant analysis and a powerful vessel are worthless without a skilled captain at the helm. The final three steps of this plan are the tactical commands of that captain, the mechanical rules of execution that transform a sound idea into a safe and profitable trade. This brings us to the crucial third step, the element that separates all professional operations from amateur guesswork. Step 3. Time the entry with a pivotal point. A beginner, having found his leading stock, is now consumed by an anxious desire to get aboard. He is terrified of missing the move. This impatience is a fatal flaw. Jesse Livermore knew that the right stock, bought at the wrong time, is always a losing trade. To enter a stock while it is still consolidating or in the midst of a reaction is to risk having one's capital and nerve ground down by the market's meaningless day-to-day fluctuations. The professional does not chase. He does not guess. He waits. He waits for the market's own unequivocal signal that the period of preparation is over and the real sustained advance is about to begin. This signal for Livermore was the decisive breach of a pivotal point. For the beginner, the simplest and most powerful pivotal point to watch for is a stock making a new high after a period of consolidation or a natural, healthy reaction. This is not just a price, it is a statement of power. It is the market's own announcement that all the latent selling pressure has been absorbed, and the path of least resistance is now clearly and decisively upward. The beginner's task is to have the supreme patience to wait for this moment. He must watch his chosen leader day after day and do nothing. He must fight the internal nagging voice that tells him to jump in early. His discipline in this waiting period is the true measure of his potential as a speculator. Have patience and wait, Livermore wrote, until the stock becomes active, until it makes a new high. You will then know that market-wise you have been justified. With the pivotal point finally reached and the signal given, the checklist immediately moves to the fourth, and perhaps most critical step for a novice. Step 4. Start small and define your risk. This is the great defensive maneuver, the step that guarantees the beginner's survival. The amateur, in his excitement, is tempted to go all in, to commit his entire intended line at this single breakout point. This is a catastrophic error. It maximizes risk at the very moment of entry. Livermore's method was the polar opposite. The beginner's first commitment should always be a small probe, a fraction of his total intended position, perhaps 1/4 or 1/5. This is not the main bet. It is a test. It is a way of asking the market with a small and manageable amount of capital, is my timing correct? Is this the real move? This approach keeps the initial risk to an absolute minimum. It is the cautious, professional way to enter a new and uncertain venture. Before this probe is even sent out, the risk must be defined with absolute precision. The beginner must determine his point of surrender, his stop-loss, the price at which the trade is proven to be a mistake. This is not a mental stop, but a hard, unchangeable order. This single act transforms the trade from a wild gamble into a calculated, business-like risk. It is the practical application of Livermore's great principle of acting as one's own insurance broker. With the small initial probe now in the market, the checklist arrives at its final decisive step. Step 5. Let the profit run. This is the step that separates the small winners from the great fortunes. It is the most psychologically difficult of all. Having successfully navigated the first 4 steps, the beginner will now have a small, profitable position in a leading stock that is moving in his favor. His natural, fearful impulse will be to snatch this profit immediately, to sell and lock in a small, secure gain. This, Livermore knew, was the great tragedy of the trading public. He stated it with the conviction of a man who had seen it 1,000 times. As long as a stock is acting right and the market is right, do not be in a hurry to take a profit. The beginner must understand that the goal of this entire 5-step plan is not to scalp a few points. It is to capture a significant portion of a major bull market move. To sell at the first sign of a profit is to abort the mission just as it is beginning. The beginner must now summon a new and unfamiliar quality, the courage to sit tight. He must have the fortitude to hold his winning position through the minor, nerve-wracking but perfectly normal reactions that are a part of every great advance. His confidence should not be in his own courage, but in the soundness of the process that has brought him to this point. He is in the right market, in the right stock, at the right time. The profit on his account is the market's own validation of his judgment. His job now is not to trade, but to manage. to have the intelligent patience to let his correct decision blossom into a truly substantial gain. If the trade continues to act right, this is the time to practice the professional art of pyramiding, of adding to the position on a rising scale, as described in Step 4 of the previous block. The initial probe has now become the foundation for a larger campaign, a campaign financed not by hope, but by the market's own proven success. This 5-step plan, then, is a complete and holistic strategy. It is a safe and logical path for the beginner to follow. It forces him to be patient. It forces him to align himself with the market's most powerful forces. It forces him to focus only on the highest quality opportunities. It forces him to manage his risk with professional discipline. And it teaches him the most difficult and most profitable skill of all, the courage to let a winner run. To adopt this plan is to take the first great step away from the chaotic, emotional world of the amateur gambler and toward the calm, disciplined, and business-like world of the professional speculator. There is no easier or safer way to begin the long and difficult journey to market mastery. It is a plan proven not by abstract theory, but by the timeless wisdom and the hard-won million-dollar experience of the master himself. To truly understand the mind of the man who forged these principles, to witness the epic market battles where this very plan was put to the ultimate test, the essential chronicle remains Edwin Lefebvre's 1923 masterpiece, Reminiscences of a Stock Operator. This is not merely a book. It is a deep psychological portrait of a master at work, a narrative that gives life and context to every one of these timeless rules. For those committed to this study, a link to the edition featuring a unique, detailed chapter-by-chapter analysis by Max Davidson, an interpretation specifically designed to translate this century-old wisdom for the modern reader, is provided in the description below.